What's up everyone, it's Karthik with MoneyVest. So in this video, we are going to be talking about both Tesla and Palantir. There's over 36% investors right now currently profitable on Tesla. We are starting to come down a little bit and the average cost is now at $219, which is higher than the current market price of $213. Of course, Tesla was down a little bit over 3% yesterday with some significant outflows of over $535 million. So once again, as you'll notice, a majority of investors now are in the red once again, with Tesla trading now below the average cost basis for most investors, with 36% of investors are the only ones that are currently profitable. There was a big hit piece from Ross Gerber today, which I want to discuss in this video. And then of course, go over the technical analysis for both Tesla and Palantir. We'll also take a look at Palantir's cost basis. I believe it's still very, very high. It is still at well over 88%. Although we have been seeing some outflows in Palantir in recent days. So anywhere from $10 to $7 million. And again, down almost 3%. A small minority of shareholders still in the red right now, but majority, over 88%, are green with Palantir, as it's very close to, of course, its near all-time highs, $26 being the average cost basis for all investors in Palantir. So we're going to discuss both of their technical analysis in just a minute, but Tesla investor Ross Gerber says he's been dumping the stock. This is in reference to Tesla because no one wants to buy the company's cars or robots. So he sold around $60 million worth of stock in Tesla amid growing concerns over the car maker, and no one seems to be interested in buying Tesla's cars anymore, Gerber told Yahoo Finance. Yep, so that's one of the only reasons why Tesla's able to sell hundreds of thousands of vehicles, set new records every single quarter, and also increase on a year-over-year basis. But yet nobody wants to buy Tesla's cars. One of Tesla's longtime investors has dumped around half his stake in Elon Musk's car maker. According to longtime shareholder Ross Gerber, that's because no one seems to be interested in buying cars or robots. And Gerber, who's been a loud critic of Musk since Tesla's CEO acquired Twitter in 2022, said he sold around $60 million worth of Tesla shares. Investment fund still has $50 million worth of shares left in the company. He says, and I quote, "Over time, I've just been sort of lowering my position because I just don't have the same level of confidence they're going to achieve the goals that were set out for Tesla several years ago, and even recently, which is to sell more cars." And then he talks about that's just a distraction from the fact that they need to sell cars this year and next year and the year after, because none of this is coming soon. That was dismissing the idea or the bullish talk regarding robotics and full self-driving technology. It's really a quagmire where you have the best products in the industry, but a CEO who doesn't actually work there, who doesn't try to sell cars, and we've seen sales go down, and that's what's happening. If you're expecting a great quarter, you're wrong. They're not selling any Teslas here other than basically discount. And while analysts have made the case that company is being undervalued as an AI firm, artificial intelligence is unlikely to save the company, he said. And also the simplest way to do it is go around, ask your neighborhood, ask them how many of you would buy a humanoid robot built by Elon Musk. And the answer is zero. Nobody wants a robot from Elon Musk. Why? Who would trust it? And the last thing I need is some robot built by Elon Musk in my house. And I don't know if they thought about the marketing of this at all yet. So here's the thing. Every time there's a new piece of technology that comes up, every time we've got a visionary around us that is actually forecasting for something crazy, it will get dismissed. There's been so many times. If we actually listened to all the people who dismissed the ideas early on, we'd never get anywhere, right? So it all comes down to the numbers, right? And it's kind of interesting how he says that ask people if you want a robot built by Elon Musk, as if Elon Musk has some type of, sort of persona towards him that people don't like him or they don't want to buy robots specific from Elon Musk. Who cares? Who cares who makes it? As long as the robot itself is efficient and is able to do tasks around the house cheaper and more efficiently, people will see the benefit over the long term. Yes, it's a crazy idea. Yes, it's kind of hard to see right now, but this is a long-term plan. And look, I don't fully disagree with his analysis or his report. He can obviously do whatever he wants with his shares, but the idea here is to understand the long-term potential. That's the untapped potential for the company, while also understanding how is the business doing today. He mentioned that sales are going down. Completely disagree, because if you come over to our platform and if you simply come over to Tesla, right, and take a look at their numbers, right? So we can come over to fundamental analysis. We can look at the last, let's say, 7 years worth of analysis. I mean, take a look at the revenue. Very, very strong. You can also look at the quarterly data. So let's just come over to the last 12 quarters. I mean, it's been very, very strong. It's been stable. So I don't really know what he's talking about when it comes to sales are going down. I mean, this is literally the last most recent quarter. Record revenue, $25.5 billion. Like, this was literally a record quarter for the company. Gross profit here, also pretty stable for a auto manufacturer. So fundamentals and the numbers are there. I mean, it's all right there. I mean, you can take a look, right? You can come over to our platform, take a look at the revenue. You can plot for different things, operating income, and we've got net income. Now, look, margins have been coming down. So that's one of the reasons why the stock's been a little bit underperforming. It's down 13% year to date, and at the same time we've seen the stock go nowhere over the last 3 years since 2021. But there is a big tailwind for Tesla with regards to interest rates, right? The rates coming down, potential rate cuts that are planned in for September, November, and December by the Federal Reserve. That's going to lower the rates on the auto loans, which is certainly going to help a lot of buyers in financing the vehicles that they are planning to buy. And you tag along the EV credits as well as the gas savings, and you've got a huge proposition for selling more vehicles. And the discounts are actually a good thing, because eventually you want prices to come down, because nobody's going to be able to compete with Tesla's efficiency or the level of technology that they bring to the table. And for every dollar worth of value that you're getting out of your Tesla vehicles, especially long term once FSD is fully built out. So their numbers are still strong. And I've mentioned this before in my previous videos that I'm not investing in Tesla solely for the purposes of humanoid robots, right? That's not my thesis. Like, that would be kind of me really putting together a fairy tale thesis for something that hasn't even happened yet, or is very unlikely to happen in the near term. Not saying long term. Long term, of course, you know, there's execution, there's adoption, there's a lot of factors at play. But my thesis for Tesla has from the beginning always been, it's been an electric vehicle company, and I wanted exposure in EVs, and Tesla is a leader in EVs, and this is a growing trend. We know that there's a thing called global warming, and this is only going to get worse, unfortunately. And so we need to reduce the emission of carbon dioxide, and of course save the environment, save the planet. So there was that angle, as well as the potential for growth because of the technological advances that Tesla has for its vehicles. And lastly, the potential for full self-driving, which is getting closer and closer every single day. So every new technology that comes on is going to be dismissed, or it's going to be critiqued in the beginning. But it's not until you actually see it in action and see it work out and play out over the years that it becomes mainstream, right? It becomes something that everybody's excited to utilize. I mean, if you were to ask me if I wanted to get a robot that could maybe do some of the more mundane tasks that I don't like doing, like, for example, doing my laundry, running the washer, running the dryer, folding my laundry, ironing clothes, like, those things are very, very tedious. Like, for me, I don't really want to spend time on that. And if there's a robot, I mean, of course I could get a maid, but if there is a robot that is more efficient and it's cheaper, and long term it makes a lot of sense to have that. It can work around the clock 24/7, doesn't really matter. It doesn't need to sleep, doesn't need to rest, doesn't need to eat. So there's a lot of benefits to that. If I can get that, then of course I'd be interested as a consumer in understanding how it works, understanding the finances related to it. So there's definitely a lot of things that they need to think about. And he's right. There's no marketing plan for it because it's not developed yet. It's not certainly in production, or it's not in a stage where it's getting deployed to people or businesses. So it's still under significant innovation. In other words, there's a lot of progress that needs to be done in order for us to get to that level where we can confidently start selling it to individuals and businesses. But that one thing is for sure, that it's going to be a significant productivity driver for a lot of businesses, especially in manufacturing. But his focus on the sales going down, the Tesla not selling any more cars or vehicles, I feel like is incorrect or inaccurate because of the numbers that we've already seen, the numbers that I've shown you guys. And also, if you take a look at the buy-sell institutions, so how many institutional investors are now getting more and more involved in Tesla, that number has been slowly and steadily trending upwards. It's now at almost 3,000 institutional investors or big money managers that are now interested in Tesla. They actually hold that stock, and that's been going up since 2020. Why? Because the company has turned the corner towards profitability. It's done incredibly well when it comes to the bottom line, cash flows, balance sheet, one of the best balance sheets in the auto space. If you come over to take a look at how much cash they actually hold on the balance sheet, we're sitting at 26 billion, actually $30 billion now. And this has been trending upwards for a really long time. And if you come take a look at their total long-term debt, 2.9 billion, current portion of long-term debt, just under 2.5 billion. So the debt levels compared to the cash are just significant in terms of how much cash they have. And also, if you plot for total assets, they're sitting at almost $52 billion in total assets. Once again, you can see it trending upwards very nicely. And you've also got total liabilities that are sitting at around $46 billion. So more assets than liabilities here for the company. That's exactly what we always want to see for the business. Now, coming over to the technical analysis. So again, there's maybe some very little truth to the idea that, okay, Elon Musk maybe is getting a little too distracted with all his other businesses, but that is still not, putting his focus away from Tesla, because they're still able to set records when it comes to revenues, assets, cash, everything moving in the right direction. There's been some concerns, I agree, with margins and price cuts. And for those reasons, Tesla's, offering too many discounts, which is obviously affecting their cost and their margins. But I think that will also potentially stop now, considering there's going to be at least some floor with where Tesla vehicles are going to be priced. They're not going to keep coming down. And at the same time, buyer affordability is going to increase with lower interest rates, right? So with more and more cuts, there's going to be lower interest rates, thereby increasing the affordability among buyers. Now, coming over to the technical analysis, as we've already discussed, we've got lower highs and lower lows. I actually sold calls on Tesla that are now up over 56% on this company. Support level, as we already know, is going to stay put at $208 a share for Tesla, all the way down to here inside $188 inside this green rectangle that we've already discussed. We're still well within the context of a downtrend. So since November 2021, we're still very much in a lower high and lower low pattern. We haven't really gone anywhere, still down a little bit over, I think 40%, might be 50% from its all-time highs of $416. So we're down just about 48%, 49% from all-time highs. So support level is going to stay put at $208 down to this green rectangle and that support. And we got a big resistance sitting right over here at $233, and also a lot of supply sitting at $233 all the way up to $267 for Tesla. Coming over to Palantir and Dan Ives, this is actually a little bit about a week or two old. This is a game changer, says Dan Ives. And the reason why I want to go over this is because of the expected move from Palantir over the long term. Because if you come take a look, we've got a price target, highest price target, which has been increased from Wedbush analyst Dan Ives, from $35 to as much as $38 with a buy rating, and of course current upside. At the time, it was of course $22, but now it is getting closer and closer. So $38 is only about $8 away for Palantir from its current levels. So not a lot of upside. So that's one of the reasons why I will be looking at selling some puts on Palantir as well. It is already starting to roll over. So this is not a surprise, because the RSI, the MACD, we discussed this in one of our previous videos, and how it's getting a little bit more on the overbought side. And of course, the valuation also is in question, because Palantir's valuation is no joke. It is definitely a very, very expensive stock, right? Trading at well over 80 to 90 times forward earnings. Price to sales are well over, I think, 25 to 30. So it's not a surprise that we're starting to see a little bit of a pullback here in Palantir. Still, over 80% of investors are profitable on the stock, but support level is going to be down here inside this higher high and higher low pattern. So in other words, in this uptrend, and that's going to be sitting roughly at $24, $25. And if it continues to sell off a little bit further, I will be looking at selling some puts on Palantir. Right now, I'm looking at the September 30th, 2024 puts. And the reason for that is because my NVIDIA puts expire this Friday. And once that collateral is released, then I will be looking at for the following week, something like Palantir. But right now, I'd be interested more in the low 20s. And it's literally a penny right now for premium. So it's absolutely nothing, next to nothing. So we'll continue to monitor this and how the premiums change as Palantir continues to see a bit of a pullback and starts to come down. And if I can get anywhere close to, let's say, 1% return on collateral in the next 1 week, I will most certainly be taking that trade at $20, because I don't mind buying Palantir at low $20, because that I think would be a very close to fair assumption, close to the fair value for Palantir. So this right here is going to be that area of support and this green rectangle for Palantir. So hope you all enjoy this video and a complete update on these two companies. A little bit of a quick technical update on Palantir. Very nice, consistent uptrend, higher highs and higher lows, but very overbought, so starting to come down a little bit. Wouldn't be surprised to see some acceleration to the downside with a near-term support sitting at $29. And if you do end up, let's say, breaking down below this level, next target's going to be closer to 24, 25 bucks. And I'll be looking at buying a lot more aggressively and selling puts with the strikes closer to $20 a share. When it comes to Tesla, still well within the context of a downtrend, so lower highs and lower lows. It's got a lot of work to do before it can finally shift that trend. And some of the tailwinds, as I've already mentioned, is going to be the interest rate potential cuts that we have priced in, the markets have priced in for later this year. But I also wanted to go over the bearish hit job from Ross Gerber and what his views are on Tesla, with him, of course, selling most of his Tesla position. So let me know your thoughts down in the comment section below. As always, make sure that you drop a like and subscribe to the channel. And 16% annual discount that's available until the end of this month for our Patreon and Discord. So I'd love to have you on board. And as always, happy investing. I'll see you all in the next video.